Welcome back to Rich Routines. Today, we reveal the secret of the world's most successful investors, those who do almost nothing. What if spending less than 1 hour per year on your money could lead to more wealth than daily trading? Today, we prove it. This is the lazy investor strategy, simple, effective, and scientifically backed. Let's break down exactly how it works. Most people believe that to win at investing, you must be smarter, faster, and more active than everyone else. This is the first myth we must dismantle. 1 hour per year. That is all it takes to manage a portfolio that outperforms most professionals. Not an hour a day or a week, just 1 hour, annual. In almost every other field, more effort equals more results. But in investing, constant decision-making is often your greatest enemy. By the end of this video, you will know the 4 pillars that allow your wealth to grow quietly while you live your life. Stay until the end for the numbers. Traditional investing fails because of noise. Financial media thrives on keeping you engaged, making you feel like you'll miss a critical update. This manufactured urgency leads to emotional mistakes, panic selling at market bottoms and buying into the hype at market peaks. Research shows that households that trade the most earn significantly lower returns than those who barely touch their investments. Active trading drains wealth. The more decisions you make, the more you lose to fees and taxes. The lazy investor strategy removes you from this cycle entirely. High costs kill returns. So what is it? The lazy investor strategy is a long-term, passive approach that prioritizes time in the market over trying to time the market. Consistency is king. You invest a fixed amount regularly into broad market funds and leave it alone. No daily checks, no market timing, just consistent, automated growth. It is built on decades of evidence from the world's best economists. Stop trying to beat the market, own the market. Let the system do the work. This laziness is in the daily execution, not the foundation. You must understand these 4 core pillars to build your own system for generational success. Pillar 1. Index funds. Instead of betting on one stock, you're buying a stake in thousands of businesses simultaneously across the whole economy. When the broader economy grows, your investment grows with it. If one company fails, it's just a ripple. When the entire market rises, you win. Index funds also have the lowest fees. Over decades, high management fees can eliminate a third of your total wealth. Index funds prevent this drain. Index funds capture the energy of the entire economy. You're not picking winners, you're profiting from the collective progress of humanity. Efficiency. As tech, medicine, and energy evolve, index funds automatically tilt toward the new leaders. It's the ultimate self-cleaning investment vehicle. Evolution. Beyond price growth, these funds pay dividends. By reinvesting them, you're buying even more shares for free, fueling your exponential growth engine automatically. Pillar 2. Diversification. Owning 10 stocks isn't enough. True diversification means spreading your money across asset types and geographic regions. Global reach. This protects you so that no single event, no matter how severe, can destroy your portfolio. You use 3 simple fund types for total global coverage. Stability. The younger you are, the more you lean into growth. As you approach retirement, you shift towards stability. This is your only annual adjustment. Planning ahead. By including international funds, you're not just tied to one country's fate. You're riding the wave of global development and emerging markets. Global wealth. Bonds provide the ballast. In stormy markets, while others panic, your bond allocation keeps your portfolio stable and your mind calm. Steady as she goes. Pillar 3. Dollar cost averaging. It removes the stress of timing. The right time to invest is always on a fixed schedule, regardless of market news. Always active. By investing the same amount every month, you buy more units when prices are low and fewer when prices are high. This balances your average cost naturally. Math at work. Once you set up automatic transfers, this pillar runs itself forever. No decisions required, no emotional stress, just pure disciplined accumulation. Set and forget. Think of dollar cost averaging like rain filling a reservoir. Small, consistent drops build an ocean of wealth that can power your entire retirement. Fill your future. The biggest benefit isn't the math, it's the psychology. You stop worrying about the dip and start focusing on what truly matters in your life. Focus on living. Pillar 4. Time in the market. This is the single most powerful force in finance. Compound interest only works its magic if you give it time. Natural growth. Starting just 15 years earlier can result in 2 to 3 times more wealth. Time is the one resource you cannot buy back. Every year you wait is a permanent loss. The most important investing decision isn't which fund to pick, it's when to start. And the answer is always right now. Let time do the heavy lifting for you. In the beginning, your growth looks flat. This is the valley of disappointment. But after year 10, the exponential curve takes over. Patience pays off, curve up. This is the snowball effect. By year 30, your returns alone will likely exceed your total contributions. That is the ultimate reward for your patience. Legacy. So, what do you do during that 1 hour? Set a recurring date, like your birthday, for your annual review. Here is your 6-step checklist for total control. Check. Step 1. Check your total growth. Step 2. Check for allocation drift. If your stock funds grew too much, your balance is now skewed. Restore the balance. Plan. Step 3. Rebalance. Sell a little of what grew and buy what lagged. This forces you to sell high and buy low without needing to predict anything. Balance is key. Step 4. Increase your contribution if your income grew. Even a small increase today leads to massive compound gains decades from now. More fuel for growth. Grow. Finally, spend 30 minutes reading foundational financial education. Not news, timeless principles. That's it. 1 hour, once a year. You're done. System active. Finish. The hardest part isn't the math, it's the discipline to stay lazy when everyone else is panicking. Trust the system, ignore the noise, and stay focused on the horizon. The financial world wants you to think it's complicated. It's not. 4 pillars are all you need to build lasting wealth with minimal effort. Simplicity wins, always. It requires only 2 things: the decision to start and the discipline to never stop. Consistency is the real superpower of the lazy investor. Stay the course. Win. Your action plan: open an account, pick index funds, set up your auto transfer, and walk away. Let the system run while you live your life. Life is meant for living. This is Rich Routines. Subscribe for weekly strategies to build wealth. Share this with one person who needs to start today. See you in the next one. We win together. Commit to the strategy today. Don't wait for the perfect moment. The perfect moment is now. Take the first step and let the clock start. Your time starts now. Build wealth. 1 hour a year, a lifetime of freedom. Start your lazy journey today. We'll see you at the top. Rich Routines. Signing off. Masterclass complete. Peace, success, wealth. The market will rise. The market will fall. Through all of it, your job is simple. Stay invested. Let time work. This strategy has built more quiet millionaires than any trading system ever created. Not because it is complicated, but because it is consistent. The investors who win are not the smartest. They are the most patient. Start, automate, stay. This is Rich Routines. We will see you at the top.